What do you think those entail?
I think that the big message that the market is sending Meta is that now is not the time to invest in moonshot ideas which are going to generate revenues in 10 or 20 years time. Things like Meta, things like the virtual reality stuff that Reality Labs is doing. And now is the time to focus on declining revenues and trying to rectify that. And that issue has kind of been brought to the fore by Sheryl Sandberg leaving the company earlier this year. So that's what the market is telling Meta, not just in today's decline, but in the decline over the last 6 months.
Although Meta did say it expects operating losses from its Reality Labs unit, which includes, of course, the metaverse. Investors don't seem to be taking to that too lightly.
Yeah, I think the economic outlook is bleak, and what we saw from Google's results, the #1 digital advertiser in the world, and Facebook #2, is that even tech, big tech, is not immune to a downturn when it comes to digital advertising. Digital advertising is now mature, but Facebook, digital advertising is its core business, and it faces a number of risks. The first is, Apple's privacy settings, which are in the price, but Apple's, reforming its App Store charging structure, as we speak, that could hit Facebook more. And of course, TikTok is just accelerating in terms of innovation, better algorithms, now launching a new gaming channel. And there's regulatory issues for Meta in many of the jurisdictions it operates in.
Reading through the report, Meta also said it plans to boost capital spending on infrastructure, about $39 billion to support its metaverse aspirations. And that statement helped a number of chip players outperform, names like NVIDIA, Marvell, Arista Networks, which counts Meta as one of its biggest customers. Curious your thoughts here.
Yeah, great for Meta's supply chain, especially chip makers. Not so good for Meta's own future outlook, because $39 billion of capital expenditure. That's against operating expenses for the year of about $100 billion. That's a pretty high figure for a software company.
Cyrus, let's turn to another big name, and that is Apple. Its highly anticipated fourth quarter results out after the close today. Wall Street looking for signs of hope amid a potential slowdown in sales ahead of the key holiday season. And it follows price increases for Apple Music and Apple TV subscriptions earlier this week, as the company faces increasing pressures from inflation, weak China demand, of course, a stronger dollar. The stock currently trading at $148. It's down about 5% in the past 3 months. Cyrus, I want to get your thoughts on Apple. What can we expect today?
Yeah, well, as we've seen from big tech earnings so far, the economic outlook is even bleaker than what economists told us last week. Rising costs are hurting businesses and consumers, and buyers of Apple hardware are likely to be more cautious. We may see some upside in their services business, but everything we've heard about results so far says the economic outlook is going to be challenging. But even worse for Apple is the geopolitical outlook. I think of the five biggest, of big tech, Apple faces the highest risk of a China backlash. So China, about 19% of Apple's revenues, and two things are going on. The first is President Biden looks set to escalate export controls aimed against China's tech sector. And at the same time, President Xi in China has reiterated China's policy of self-reliance, but also of unification of Taiwan, which means on the supply side, TSMC, Apple's biggest chip supplier and a critical supplier for iPhones and Macs, that's being caught in the crosswire. So geopolitically, Apple's in a tricky place, especially as it readjusts its supply chain away from China.
Do you think, Cyrus, actually to that last point you just made, that Apple will try to indirectly address this concern by showing the amount of investment it's making in other countries across Latin America and India as well?
Yeah, I think Apple has made it clear, the management have made it clear they're going to diversify away from China, but of course the Chinese supply chain is incredibly efficient, and therefore there are bound to be significant logistical challenges along the way, and potentially a rise in costs. Prima facie, you move from China to India, your costs should fall, but actually moving an entire supply chain as complex as Apple's could result initially in a rise in costs. So that is another risk in the medium term.